Today we would like to talk about Japanese economic data. Overnight we've had the release of the Japanese PMI data, and what the PMI data does for us is it separates the economy into its manufacturing component and also its services component, and it lets investors gauge the relative strength of each of those. However, what we think is important context first is to focus on why investors are starting to become more invested in Japanese equities and Japanese economic data. So if we cast our minds back, Japanese equities have always traded at a valuation discount relative to other global regions such as the US, and that has been due to poor corporate governance and also lower return on equities compared to the US. And what we've seen change is government encouragement to have reform on corporate governance and also stock market initiatives to boost the return on equity. So if we focus on the stock market component, what they've seen within Japanese corporates is that they have a lot of cash on the balance sheet, and they've encouraged those corporates to distribute that to shareholders. So that could come in the form of either dividend payments or share buybacks. And because of this, we've seen investors become more interested in Japanese equities, and Japanese equities being rewarded through better performance and now also higher valuations. So this has meant that investors are now more focused on what's happening in Japan. So if we cast our minds over to what we've actually seen from the PMI data, we know that that comes in manufacturing and services. And as a quick reminder, any reading above 50, that will signal expansion, and any reading below 50 signals contraction. So if we start with manufacturing first, we saw that slip slightly below the 50 mark at around 49. And the reasons for that is that we've seen weaker new orders and also weaker new export data. And weaker new exports could be linked to the volatility that we've seen within the Japanese yen recently. So as a consequence of weaker new orders and export data, we've seen the employment component start to fall lower as those companies look to reduce headcount because of weaker demand. If we look at services next, we also saw that new business has started to slow, and that's linked to weaker domestic growth, but also weaker international growth. However, employment hasn't been hit like we've seen in the manufacturing sector. It's continued to rise, but just at a slowing rate, with Japanese corporates saying that they believe they have sufficient staffing numbers to cover current demand. So thank you for watching today's video, and please catch us tomorrow for a week in markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.